Here's what's coming up on today's show.
But at the end of the day, you've got to take a good hard look so that you feel confident, or you'll always be that person that's looking at your account 3 times a day and worried about, the economic environment and, everything else that the TV and the radio is going to push at you day to day.
Welcome to the How Money Works podcast with Craig and Jennifer Moser of Maestro Wealth Advisors, serving you throughout the Triad of North Carolina for more than 30 years.
Time once again for How Money Works with the team from Maestro Wealth Advisors. Craig and Jennifer Moser here to talk investing, finance, and retirement. Get yourself onto the calendar for a complimentary consultation and review at 336-448-1086. That's 336-448-1086 for that complimentary consultation. Again, at 336-448-1086. 1086. Great show lined up. We're going to get right into it. We're going to change it around a little bit. We're going to take some email questions from folks around the area to kick things off. And as always, if you've got some questions and you'd like to submit one, go to maestrowealth.com. That's maestrowealth.com. Craig, what's going on, buddy? How are you?
I'm doing great. How are you?
Doing pretty good.
Can I rat on you? You were yawning right before he started. It's like...
I couldn't sleep last night.
Oh, okay.
I just couldn't. I just went downstairs, got in the recliner, turned it up, put the most boring show on I could find, and tried to go to sleep.
And wound up watching that boring show, didn't you?
I probably did.
Yeah. Jen, how are you today?
I'm doing great. I have not yawned yet. So
well, very good. Well, very good.
Don't talk about it now.
Well, that's true. You'll get into it. So let's dive right in and see if we can help some folks out. We're changing the format a little bit here. So we're going to take some email questions, as I mentioned, and see if we can help some folks out with some general useful nuggets of information here. So we got Gerald who dropped in a line. He's from Greensboro. And this is kind of cool. He says, I've always been a big appreciator of the arts, and I'd love to figure out a way to give more to my local art museum. Before I send a check over, guys, is there something I should keep in mind in terms of taxation or other ramifications? Any best practices you can share?
Well, not enough information, but I'll give you some information, and then I would say we should talk offline. Okay. So first, how old are you? If you're over the age of 70 and a half, you can gift or donate up to $108,000 a year directly from an IRA to a qualified charity. You should check the organization out. Make sure you're gifting to something called a 501c3 organization. It's just basically a nonprofit. But, in 2025, also, if you do that, I don't know if you've done this before or not, but the gifting part, you have to keep up with the data that you send out, because there's a 1099-R that comes out of your IRA when you gift. But this year in 2025, apparently there's this thing called Code Y. Don't ask me, because I don't know for sure. I haven't done it yet, on the form that will identify the charitable distribution. So that's kind of cool. So what if you're not over 70 and a half? Again, talk to me. The question is, do you have any highly appreciated assets that you could donate, such as, a stock? Let's say that, so we had some clients, they worked for this company. I can't throw too many names out, but for years they were given stock as part of their comp, part of their compensation. And so they have low cost and highly appreciated stocks. Think about, you pay $20 for a share of stock and it's worth $200 now. If you sell it, you pay taxes on the $180 that it made, or you can gift the entire value, in my example, $200, to the charitable organization, and that would be your contribution. Not sure if you can deduct it, depends on how much you give away, and you add other things to it, mortgage from your house and that type of stuff. But if you can't get past the $30,000, that's the standard deduction, then, well, at least you didn't pay taxes on the money that you gave for the gift. So there's a lot to talk about. We have to take a look at it. If you give me a call, I'll be happy to go through it with you, and we can look at your exact situation.
And Craig, don't forget, the new Trump tax laws say that you can donate up to $1,000 in 2025, Gerald, if you do standard deduction. So lots of different things. I think, Craig, the key point here for you, Gerald, is yes, there are strategic ways to give to your charity, but give us a call at 336-448-1086, and we can go through the nuances and find the best solution for you to accomplish what you want. Our number again is 336-448-1086. And remember, Craig is a certified financial planner and deals with tax planning in addition to the whole retirement planning subject as you're looking at donations and other financial questions that you may have, Gerald.
Yeah, great question. So thank you so much for listening to the program and dropping that line into the team. Again, you can visit them at maestrowealth.com as well. Lots of information on the website too, maestrowealth.com. All right, let's do another one here. We've got Betsy in Winston-Salem, and she says, how typical is it to set up your beneficiaries as equals? I have 3 children, but unfortunately I'm estranged from one of them for a while now. So I was considering setting them up into thirds, everybody just getting the same amount, but I've also considered doing 2 children getting 45% each and the estranged one getting 10%. They may cause issues later on, she says, after she's gone. So yeah, it could, right?
It could, but there's just no set rule on what percentage of your assets go to an heir. So you set the rules. It's your stuff. You accumulated over your lifetime all of this stuff. It's totally up to you. So friction. Could there be some problems? We've had a couple of families, though the illegal docs stood and everything worked, there was a lawsuit. I thought this was mine. That's not what they meant. Anybody can sue anybody, so you have to understand that. But in general terms, if it's in the will, if it's done properly, a good, totally executed will, they get what they get.
And Betsy, remember, the will really is your last resort. If you go ahead and identify those beneficiaries right on the account, that's really the best way to do it. So make sure you identify each asset that you have, your investment account, your money market, your CDs, your checking account, whatever. If those assets have that beneficiary designation, it'll go directly. All they have to do is present that death certificate, and then things start moving for you and for the heirs. The will is kind of the last resort. I will say, Betsy, and Craig, you didn't, as I jumped right in and cut you off, sorry.
You did.
Sorry. So you can identify different percentages on investment accounts, but you cannot do that on bank accounts. When you do a payable on death designation, everyone gets the same percentage. For whatever reason, the way the laws are in North Carolina, that you can only do, if you had named 3 kids, it's a third. If it's 2 kids, it's 50%. So you're not going to be able to make that nuance on the actual account itself. You will have to use your will to make that happen.
You're talking about a payable on death?
Payable on death.
Yes. Okay.
Yeah.
Well, so there you are.
So Betsy, a lot of things to think about. And like Craig said, it's your money. You can do what you want. Maybe they know why they're estranged and they won't have any hard feelings and it won't cause friction later. But
it's not an unusual question, though. It happens a lot. So don't feel like you're the only one.
Yeah, great point there as well. So again, if you need some help with that and you're in a similar situation or you're just trying to figure out how to set up that portion of your retirement strategy, reach out to Craig and Jennifer at 336-448-1086. Again, 336-448-1086 and have a conversation about your retirement journey. Let's see if we can squeeze one more in, guys, before we jump out and take a break. And then we'll come back and have a good conversation about some more financial and retirement information on the other side. All right, so we've got a question from Rick in Walnut Cove. He says, I'm 66, guys, just retired. I have about $500,000 in a 401k, $220,000 in a Roth IRA, and $75,000 in a savings account. Question is which account do you start withdrawing from first? So he is retired, he says.
Yeah. I hate doing these because I don't have all the information, but we need to talk a little bit. There's some things to consider. So since you just retired, one of the things would be, here we are in the middle of the year. How much income did you earn so far this year? If you're a high wage earner, it might force me to say maybe take a little bit out of the cash account and sort of blend that with the 401k. But as a general statement, barring the tax bracket that you're in prior to retiring, I would say the primary thing you should look at is what do you think is going to happen in the future for taxes? You have to play under the rules that are given to you. Right now, the rules say that the tax rates are going to remain the same probably for at least the next 3 or so years. So let's use these tax rates, which are low historically, and use your pre-tax savings accounts, your 401k, because you're already used to paying the taxes. So, there's other things to look at. I know that's why you need to come and see us, IRMA and all these other things. But generally saying, I would use the pre-tax account. The Roth IRA, if you believe, as I do, that in the future they're going to charge more for taxes because they owe a lot, then maybe it's a smart thing to reduce the balances now so you don't have so much that will be required as a distribution later. Does that make any sense?
Right. And Rick, you're similar to a lot of our clients that come in and see us. They've got different buckets that they can draw from. And that's one of the advantages of coming in and actually speaking with a qualified financial advisor, someone at our office, is that we'll sit down and we'll look at what is it that you keep after you do those distributions. We want you to keep as much as possible, not only this year, but in the future years. So we're going to be looking at that in the analysis and coming up with a plan with you and for you so you feel confident in how you're actually structuring that income plan or that paycheck that you're paying yourself every month for.
If you think about it, we're trusting our elected politicians to decide on how much tax we pay. Right now, from a historical tax rate perspective, rates are low. So that's the reason why I said what I said. But again, your particular situation will dictate the way that we would approach this.
Yeah. So we love the email questions that you send us. Please, as something comes up in your day-to-day, just shoot us an email at info@maestrowealth.com. That's info@maestro wealth.com, and we'll answer those questions on the air. And if you want us to answer those questions individually or personally, throw a phone number on or say, can you answer this now? And we'll start that dialogue over the emails with you to see if we can fine tune and answer those things so you don't wonder what to do or how to go forward. That's why we do the radio show, to provide information, and that's why we love these questions. So keep them coming, and you'll hear more of these on the radio. We're getting ready to go to break, so perfect time for a call into the show, 336-448-1086. Get time on the calendar, speak with Craig or myself. Craig is a certified financial planner. I am a certified exit planning advisor, very qualified to talk to you about financial planning and retirement planning as you are 5 to 7 years on either side of retirement. That is what we do every day. Give us a call, 336-448-1086. When we come back, we're going to be talking about what stage are you in your retirement planning. There are actually kind of 3 stages, and we see these 3 stages at various times with the clients and the prospective clients that come into us. So stay tuned, and we're going to go through that.
336-448-1086 to get yourself onto the calendar for that complimentary consultation and review. 336-448-1086. Again, 336-448-1086. Craig's a certified financial planner. Jennifer's a certified exit planning advisor with Maestro Wealth Advisor. And so they got the whole team there. It's a family operation as well. They've got Cameron, their son, as well as Heather's there. And the whole team's there. So a lot of good stuff. You guys should reach out to them, check them out, give them a call, 336-448-1086, or visit them online at maestrowealth.com. Craig, before we get into this next piece, so we're going to talk about knowing where we stand. Jennifer teed that up, saying we're going to talk about the 3 phases. I was thinking about, you and I were chatting offline about military service, and my daughter's in the Navy, and she just left France. Had herself a good time. She's like, all right, this was worth it. This was fun. so they went to Notre Dame. So she was very excited about seeing that and taking some pictures. Yeah, very cool.
Yeah, it is cool. Well, Craig, I don't think you ever went to France in your tour with the Air Force.
No.
Nope.
It was a little different.
Different part of the country.
It was a little different.
Yeah, we just never bring it up very often. So thank you for your service, my friend.
Well,
I always
welcome.
appreciate
You're welcome, of course.
But let's get into it. Let's have a conversation here, knowing where you stand. So we have 3 classifications, right, of people where they kind of are in retirement. So let's start with the first one, the I have no idea if I can retire type person. So how does that look?
Well, I mean, you've got to think about, okay, you come in here and say, I want to retire, but I don't know if I can. You have to think about what that lifestyle is going to be like. Think about this. You've lived a certain lifestyle. Let's say you make a couple $100,000 a year, okay? And then you walk in here, and by the time we boil it down, you say, I can live on 50. I'm going to look at you and say, you can't. You're used to a lifestyle of $200,000 a year. Somewhere near that is going to be what it is. Now, that's the income part. You have to have a cash flow. And then, what are the streams of income and when would you turn them on? So not so much anymore, but people, especially our parents, had pensions. You had a company you worked for, you stayed there so many years, and they paid you a paycheck afterwards to reward you for part of your service to that company. It was a pension. It was great. We don't get many of those anymore. Social Security. People are a little worried about Social Security. They'll have to work it out. I wouldn't lose any sleep over not getting what you paid in for your whole life, but they're going to have to do something to fix the balance in the Social Security Trust Fund. But looking forward, you've got to visualize what that is really going to be. So we're going to ask you these questions when you come into the office. We're going to ask you for some data to make sure that you quantify the things that you've already done and what you're continuing to do for savings, and try to work through this with you.
I call this, I have no idea if I can retire. I call this the initial stage. This is the first thoughts of, I'm kind of at that age. Mm-hmm. I'm going to be retiring soon. And so my idea on this is when people really start listening to advice. So they tune into the radio, they pull information from websites, they go to retirement workshops and webinars to try to gain that knowledge, to get a little bit more education on can I retire? And those type of resources are on our website if you're at that stage. So you would go to maestrowealth.com, go maestrowealth.com events to see upcoming webinars on different things that we've got coming on. We've got resources and tools there to really start getting educated, and really just continue to tune into the radio and listen to lots of different advice. And you've got to kind of put all of this in reflection when you start hearing about all these things, and don't let it freeze you or immobilize you on what you need to do. Mm-hmm. And then you're ready for the next step, right? So there's 3 steps we talked about. I have no idea if I can retire. Then you go, I think I have enough money to retire. So in that stage, Craig, what kind of things do we lead people through, and questions do we ask if they think they have enough money to retire?
Well, it's kind of the same thing, but have you ever thought about where the paycheck's going to come from? Because that's what it really is. It comes from, pension or Social Security, like we mentioned. If you're a real estate investor, maybe you have cash flow coming in from the rentals that are coming in from those, and then the money you have put back in quote unquote retirement accounts, the money. So you have to look at that and say, I think I have enough. Well, then you have to do a measurement. The aggressive investments that you did when you were young, the dips and valleys that those investments took during times when the markets receded and went back, you can't let that same strategy be the strategy you use when you start to withdraw on it. But, you have to look at it and say, what type of return and the consistency of it do I need to make this all work for a long time? What's the rate of return that you do need?
And I think people in this stage, they've done a quick and dirty back of the napkin analysis. Or maybe they've looked at their financial calculator on their employer 401k website, which gives you a consistent return, and they know how much money is there. And you've put in some rough numbers and you push the button, hoping that it's going to be green light for you. Or maybe you've compared your situation to a friend, neighbor, or family member. And that's when you're thinking, well, I think I have enough if I compare it, if I've done the quick and dirty, and if I've done whatever. Well, again, do you want to retire with you think you have enough, or do you want to do that third stage? And that third stage is, I know I have enough money to retire. So we want you to know that you know that you know. And how do we get people to that stage, Craig?
Well, we do analysis. So we had a couple that came in, have done a great job, no debt, a healthy savings in the retirement accounts, and pretty consistent and heavy sprint to the end if you want. So they've got about 4 or 5 more years left. And when we ran this thing, it was great. As a matter of fact, when I finished, I said, if you stopped a little earlier, you could, and we ran an analysis that showed not the last 2 years, but about 3 years more. And we ran that, and he's like, that makes me feel a lot more confident. We looked at different things. We looked at what happens if one of you passed away, because you'll lose one of your Social Security checks for sure, and what else might be impacted, the tax rate and things like that. We did a long-term care scenario. We raised the tax rates on one of the scenarios we did, and all of these came through really good. There were things that they could do to improve. Risk was a big thing. They were taking way too much risk because that's what they were used to. But even when we reduced the volatility down, it ran wonderfully, and it didn't have many bumps in the road, as it would have maybe a little earlier. So it all comes down to running the analysis. We call it the plan because that's what it is. But you look at different scenarios and you say it works under these. You can pick some scenarios if you want to do them yourself. But at the end of the day, you've got to take a good hard look so that you feel confident, or you'll always be that person that's looking at your account 3 times a day and worried about, the economic environment and, everything else that the TV and the radio is going to push at you day to day. So again, confidence is the most important thing.
The only way to know if you have enough money to retire is to have run your numbers and your analysis. Our comprehensive, individualized written retirement analysis and plan provides the clarity and gives you the confidence to step into retirement. We cover the tax strategies, address potential high costs of medical or long-term care. We build inflation and longevity. We provide an income plan based on your Social Security, your assets, and your lifestyle goals. We address the what ifs before they become the what nows, or even worse, the too lates. So give yourself the clarity and confidence. Call us today to schedule your complimentary, no cost, no obligation appointment with Craig or myself, 336-448-1086, 336-448-1086. Allow us to get you from, I don't have an idea if I can retire, to I know I have enough money to retire. Again, that number, 336-448-1086, 336-448-1086.
Oh, great content and great conversation today. Jennifer, you kind of talked about how to get a hold of you and some of the pieces of that. What does it look like, though? Like, what is the flow, if you will, of getting on the calendar?
Yeah, and I'll bring this out as an example. So I sat down with a new prospective client the other day, and they had already, talked with another financial advisory firm, and they just didn't feel right to this individual. It felt a little fast, a little racy, a little bit too formulaic. And they set an appointment with us and sat down across from me, and we started talking, and I just walked him through our process and told him that we don't make recommendations right away because we don't know your situation. We have a process that we go through. It's a deliberate, proven process to understand where you are, where you want to be, where we are, and how we can help you. And we have a sequence of meetings that we do to make sure we uncover what we need to uncover. And we basically present the analysis to him. The first appointment, I say they've got to do their homework, which basically is bring all your information and gather all your data and kind of get it organized. Maybe the first time they've ever organized it in their entire life. And they're like, oh my gosh, look at how much money I have. Or, oh my gosh, I didn't know I had that. And so that's their homework. And then the second appointment, we've done our homework where we take all their information and we run lots of different analysis for them. We were going to provide them information on how much they're paying in fees, the volatility and their mix of their assets. We're going to show them that given different scenarios, are they going to be successful in retirement? What does success mean? Not running out of money. That's the main ingredient of being successful in retirement. They've told us how they want to live, the lifestyle, how long they want to live, and then we're going to try to mess it up with a couple of life events that may occur. Again, I talked about the what ifs so they don't become the what nows and then, oh my gosh, the too lates. So we're going to do that on that second appointment. And then on the third appointment, if we see things that might need to be improved or we think we can improve, we'll ask you, do you want us to show you some, our recommendations and how we think we can better your situation? Most people will say yes. I mean, it's complimentary, no obligation, right? Why wouldn't you get a recommendation from a certified financial planner and a certified exit planning advisor with together, we've got 70 some years in the business, right? And we're a husband-wife team. We kind of look at it from different angles, male and female. So they usually say yes. So then on the third appointment, we will actually go through and give them a written recommendation of how they're going to be generating income, where they pull money from, how it should be invested, what risk are we trying to mitigate and solve for, and hopefully prolong that retirement nest egg and give them a better outcome. So that will be the third appointment. So, and that is when we actually make our recommendations. So we've talked with you at least 3.5 hours or 4 hours before we're really even giving you a recommendation. And so when I sat across from that prospective client, I asked him, I said, does that sound okay with you? Do you want to move forward? And he goes, yes, I like this. I don't feel rushed. I don't feel like, I'm a formula, check the box and move on. So that's the experience that clients get when they sit down with an advisor at Maestro Wealth Advisors.
And so if you'd like to experience that for yourself, reach out to the team at 336-448-1086 to get started today with that consultation and review. 336-448-1086. That's 336-448-1086. Thank you for listening to How Money Works. For Craig and Jennifer, I'm your host, Mark. We'll see you next week. Thank you so much for checking out the podcast today. If you have any questions about what we've discussed, remember, you can get a complimentary financial review with the team at Maestro Wealth Advisors by calling 336-448-1086 or go online to howmoneyworksradio.com for other great resources and ways to reach the team. You can also check the show notes of today's episode for our contact information as well. And don't forget to subscribe to the podcast on your favorite app so you never miss an episode. We're on Apple Podcasts, Spotify, Google Podcasts, and all the most popular apps. For Craig and Jennifer Moser, I'm Mark Killian. We'll talk to you next time on the How Money Works podcast.
Craig Moser is a financial advisor and certified financial planner. Securities offered through Avantax Investment Services, member FINRA SIPC. Investment advisory services offered through Avantax Advisory Services. Insurance services offered through Avantax Affiliated Insurance Agency.